Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. Remember, this is going to be a very, very important week for all of us to track the fine print of the budget getting a reaction in the markets. And of course, the earnings will continue to play a part. We will have the auto sales figures continuing to give a reaction domestically and globally. Again, there is a tumultuous impact as far as Donald Trump's tariff updates are concerned. So all of it will continue to be something that the markets and investors will continue to keep an eye out on. Remember, Saturday we had this special session, the whole day of trade on the budget day, and the markets did see a lot of volatility, ended almost flattish in trade, but there was good news coming in by way of tax cuts, and that fueled some of the consumption-oriented stocks, FMCG stocks, auto stocks, hoping that the discretionary spend will increase, more money in the hands of the middle class. The salaried taxpayer will finally come into the economy as well. So it was FMCG, real estate, autos, all of those where they felt there could be an impact that could be seen of higher, of more money in the hands of people will start to move into the economy too. Now, of course, we did see following a sustained up move of last four trading sessions, the Nifty witnessed high volatility, ended flat with a negative bias, but it managed to snap the 3 week of a losing streak. It gained about 1.5% on the benchmark level on the week that's ended on Saturday as well. Now, going ahead into this new week, like I said, a confluence of factors will be important. Of course, corporate earnings, the upcoming RBI MPC meeting will be important. But what will also be important to track is that India will have to brace for a tumultuous week ahead. US equity futures have already seen a sharp sell off on Sunday evening, US time, in response to US President Donald Trump's imposing tariffs on Canada, Mexico, and China. 25% tariffs on imports from from Canada and Mexico, and 10% from on Chinese imports as well. Therefore, we did see Dow Jones was down 600 points. S&P 500 futures sank about 2% or over 100 points. Nasdaq futures was also down by 550 odd points. And the US dollar again gained its strength right there back to 109 odd levels. That will be important to track. FPI flows were, well, of course, they were absent, but we are looking at just the key figures that have come in: 1,327 crores on the downside, on the lower side, but net buyers on the domestic institutional investors on the 33rd consecutive session, they bought 824 crores, but a clearer picture will be seen in today's trading session. Gold prices again have surged past $2,800 a mark for the first time, and this is right after investors are driving as a flight to safety following Donald Trump's tariff threats coming into fore as well. Let's in fact welcome our top guest to help us understand, how do you navigate through all of these factors. Mr. Vineet Bulinchka, Head of Research at Ventura Securities, is with us. Warm welcome to you, Vineet. Good to have you with us. The biggest event that we were hoping for is now out of the way. On the taxes front, higher than expectations cuts are coming in. But of course, there was a lot of expectations when we were going into the budget. The finance minister should look to kickstart the economy, get it back on track, should definitely pump demand and consumption. Have all of those been taken care of by the budget, or still there is some room that needs to be addressed now?
No, I think what we've got for in the budget is more than we could have bargained for. The entire focus of the budget has been to kickstart the economic progress. Capex spend, which a lot of broker notes are saying that it's going to slow down. I don't believe that, because they've maintained the rate at which it was last year, and in this current year we are not able to even reach to that status. So I believe that the revised estimates, pay jo budget estimates are there, they're pretty reasonable. It's a 10 to 11% growth, and we will see all sectors of the economy firing, barring for the IT space or those stocks which are exposed to the international markets.
Right. But Vinit, like I said in my introduction as well, do you think what the budget could have done for the markets and for the direction that it takes will be probably undone and more by what Mr. Donald Trump is announcing by way of tariffs?
See, what this is going to lead to is going to lead to a massive slowdown in consumption in the mother market of the US, because things are going to get expensive. And when things get expensive, there will be cuts in spending. And with the the way the US aid has been blocked completely until any other signs coming through, and he has also stopped aid to South Africa because of humanitarian issues out there. So we can see clearly that global economy can wind down, and if China also gets pulled into this, which they obviously haven't reacted to, uh, his tariffs, the way they react would be another sucker for the markets. So for the time being, I believe that things will be not so hunky dory, but there are some aspects of the market which could do really well, and that is the entire consumption space.
All right, and we are already looking at the pre-open trades hinting at sharp lower start for the Nifty right there, over a percent downtick as the Gift Nifty was also pointing out to. Now about 0.8% lower at 23,276 on the Nifty. What's also important to see is how the heavyweights may be reacting. In the pre-open trade, there is a sharp downside on heavyweights like Reliance Industries. That's indicative of a downside and a start at 2.5% lower, 1230 odd levels. Even for the banking and the IT counters, let's look. HDFC Bank is something that you should look at. 2% lower, 16 now 57 is what is getting indicative of. Let's look at Infosys, the other large heavyweight within the IT pack, to see how the trends are going to be shaping up. About 0.8% lower. So it could be a negative start is what we are looking towards. But let's see whether the momentum in the FMCG counters continues. Remember, we did see sharp spike coming in on the likes of HUL, Britannia, Nestle on the budget day as far as the FMCG counters are concerned. Real estate counters were also higher. So HUL is again indicative of a positive start, although just mild. Britannia about 1.6% higher is getting indicative of as well. We will also look at the auto stocks. Some of them have come out with the data points after the market hours, like an Aisha, for instance. So that is something that we will look at as well. Royal Enfield sales are up over 19.5%. Hero Moto January sales are up 2%. Domestic sales, however, were down 2% right there. So mixed trade coming in, yeah, 4% higher start for Aisha Motors is what is getting indicative of. So we will be probably looking at all of these factors. When it coming back to you, it was the theme on the budget day was forget about PSU stocks, forget about anything else, just go, and look at the consumption stocks, those which have been so far extremely volatile, those which have been right on the back foot right now. FMCG stocks, for instance, consumer discretionary stocks, consumer staple stocks, these were actually getting into the front row. Do you think it is now time again to look at the FMCG basket?
I think what the government has done is they've taken cognizance of the fact that the middle class was getting compromised because of the inflation, and the way
Yeah.
they've cut their taxes. It really is a spinning a very very good tail for the FMCG and the consumption pack. I believe that this will be a long term trend, and one should accumulate stocks in this segment aggressively, because I think this sector has been out of favor for a very long time, and we'll see the mojo coming back. And I won't be surprised if we see a kind of a trend which we have seen prevalent in the rest of the markets over the last couple of years play out solely in the consumption theme.
Got that. How would you look at the auto space, particularly with the tax rebate also going up? Do you think this space will also get enthused with people looking at potential demand uptick here?
So I believe that autos will also do well. Two-wheeler space, TVS looks very good. Hero Honda should also do well, though their initial numbers have been disappointing for the month of Jan. Eicher Motors and Maruti are stocks which we think will do very well going ahead.
Aisha and Maruti. So those are the pockets that you expect to continue. How about the real estate space? Is that something that is on top of your radar? Of course, we should not forget that the RBI policy will be upcoming now. And after the recent liquidity measures, there is high hope that this time itself, we may see the interest rate cut coming in. If that happens, will that provide an additional stimulus? Already, this space was in focus in the budget too, with, of course, relief on the second home ownership as well. So, how are you looking at the real estate basket again?
So, the real estate basket is going to be a mixed bag. I expect the cuts in the US market and, to soften the employment opportunities for the IT space. And if that were to happen, I think, three critical markets, Bangalore, Pune, Hyderabad, and Gurgaon could come under some selling pressure, a weakness. But otherwise, if you look at the rest of India, tier two players, regional players, they should do rather well. Mumbai will be a mixed bag, but overall should trend better than the three cities that I mentioned to you.
Okay. But Vinit, if I have to ask you, have you selected any key stocks, added any key sectors to your clients' portfolios after the budget? Where do you think the maximum benefit will come in? Where do you think investors should now continue to focus on?
So as we mentioned to you, the consumer durables, the discretionary FMCG stocks. We also like V2 retail. We should look at Trent has corrected quite a bit. So I think these are the sectors where one should be focusing on. And I think, a focused approach, concentrated approach with the FMCG in mind, being not only defensive, but being a very, very thematic dream uh, uh, theme driven by the sheer, consumption money that is being put, disposable money that is put in the hands of the consumer. So I think you should be overweight that at least 20-25% of your portfolio is what I would recommend with, given that there's a lot of uncertainty around the international markets.
Okay, got that. We'll also welcome Vaishali Parekh on board. She's a Vice President Technical Research and Analysis at Prabhudas Leeladhar. Vaishali, warm welcome. Good to have you with us at the start of the week. Tell me, how was the budget for you, particularly, personally, and what do you think it has in store for the markets?
Morning, all of you. So yes, budget, there were a lot of expectations, and so there was a pre-run in defense and capital goods, etc. But I think overall there's nothing much to complain. I mean, it has been good for the masses actually. So well, right now consumption, as everyone is saying, is the theme. And talking about market itself, well, we did not see technically 23,650 being crossed. So we were expecting it to be a sideways market, and today we are seeing a gap down opening. So I guess we still do have our open targets of 22,500, but we are pretty much towards the bottom. So I would say that yes, wait for market to stabilize, but there are definitely some stocks which make a value buying. So yes, that's the way to look at the market right now.
Okay, 23,319, still about 0.7% lower. We could be looking at a lower start, as was being indicated, global cues as well as the gift nifty as well. So, Vaishali, top stocks for today, right after the budget day. Where do you think momentum could continue, or newer stocks coming back in focus?
So, well, as we spoke about FMCG and we saw good run up already begun in HUL and all. So, I would say now ITC also, because even the hotel counter is doing very well. So, well, now it is ITC Hotel, but ITC on the whole is showing a lot of strength. So, that's one of the stocks which you can see if there is follow up buying. This can go towards, well, I'm talking about ITC. So, ITC can go towards gradually 490 to 500, and ITC Hotel is quite a good level to buy right now. So yes, these are the two stocks that I would be looking at right now.
Okay, getting back to Vineet as well and bringing him into the conversation. ITC versus ITC hotels. How are you looking at the future opportunity for investors? Is there something that investors should now look at before deciding which ITC stock should be there in their portfolio?
I think both should be there in your portfolio. ITC has cigarettes are going to do well. There is no excise, no incremental duties on cigarettes. FMCG portfolio will now be the focus of the organization. They also have a bit of IT and they have an agri portfolio. We are expecting a bumper rabi crop this year. So I think out of the four verticals, three are going to be firing on cylinders. ITC looks good. ITC hotels, if you see, it is the third largest chain, and uh, even if you were to give a haircut of 20% to the value of Indian hotels in terms of EBITDA, you are still looking at a 40% upside. So I think ITC hotels should do really well.
ITC hotels also should do really well, though both the stocks should be there in your portfolio as per Vineet as of now. Okay, got it, get that. Now let's look at some of the other pockets as well, which probably could be on investors' radar. Like I mentioned, I think after the budget is out, the next big trigger will be coming on Friday, and that's as far as the RBI policy is concerned. So Vaishali, are you again looking at the rate sensitive sectors, autos, realty, banks, financials? Are they going to be in focus? There are high hopes that this time around rate cut will be there.
Well, for now, as the current market scenario, I think reality, all these sectors have really shown signs of bottoming out. So I guess for a long-term perspective, of course, these should not be ruled out. But stock specific, if you were to ask me, look at Bajaj Finance. I mean, it's holding on so well. So that is one stock which still continues to show a lot of positivity. So I would focus on Bajaj Finance. And besides that, well, the public sector banks, I mean, hardly, if you see SBI, these are the stocks which have really shown signs of bottoming out. And, well, I would not say from a day to day trading perspective, but fair levels to start accumulating these stocks.
Okay, but Vinith, I'll also understand from you. Do you think the budget had enough in by way of fiscal measures that they could do to pump prime the economy, and now it's the onus will be on the RBI to get growth back on track. Apart from inflation, also focus on growth, and therefore the rate cut could be announced. How much of an impact could we see on the markets if a rate cut is announced by, say, 25 basis points, the lowest that we could expect?
So, before going into the rate cut, we should understand that, government has foregone 1 lakh odd crores of in revenue and still remained sound on fiscal deficit as well as on capex spend. And their welfare schemes are also not leaving far behind. So it's a very confident budget. The government is very cognizant of the fact that things are improving and they're only going to get better. We have seen that in the GST collections, 1.96 lakh crores per month. So almost 2 lakh crores per month equals to about 24 lakh crores of GST income. Uh, if you if you move from the budget to the fiscal monetary policy, we've already seen liquidity measures of 1,50,000 crores being unleashed, and that is going to happen in three stages. So I don't think that RBI would jump the gun and lower the interest rates because then you will be contributing to a free fall in the rupee also. So keeping all these things in mind, it makes sense to do a measured performance on the interest rate cut, and that should happen over a period of time.
Fair point. Okay. Viewers, we'll try to focus right now on the market opening then, and then we will come back to both Vaishali and Vineet to understand how you should be really looking at this new week. 200 points lower, 23,272. As far as the Nifty is concerned, we're down by 0.9% right at open. The Nifty Bank opening 560 points lower in trade, a percent or so down, 48,960. As far as the Nifty Bank also goes at this point, let us look at the big heavyweight counters. Let's start off with the Nifty Realty Index has come in 2% lower. Remember, this was the top moving sector right on after the budget speech was announced. 3% higher is what we actually saw for the realty index. Today, it's opening nearly 2% down in trade. Nifty metals have slipped 2.5% lower. Let's also look at the heavyweight counters, the likes of HDFC Bank. Let's look at Reliance Industries. They were indicating to a lower start. and let's see how they are. Yes, there's a softer start for HDFC Bank, 1.3% lower, 1668 is what we are looking at. Let's also pull up Reliance Industries, that's lower by about a percent at 1253 odd levels currently. We'll also pull up Infosys from the IT pack to see how the flavor is over there, about 0.5% lower. So the Nifty Bank is lower. That's pulling down. That's being pulled down for all the banks. IT stocks like TCS, Infosys, both down, pulling down the ID stocks right there. Let us look at even the other pockets. Let's look, for instance. The IT is now slipping away 1% lower, and so is the Nifty Bank. We're seeing further pulls on the lower side. Let's look at some of the PSU stocks. BEL, BPCL, they're all down in trade, but consumption oriented stocks, Nestle up by 0.4%, Titan up in the green in trades today as well. So again, it's the focus back on consumption oriented stocks. Let's also pull up HUL Britannia to see how those stocks are moving. Remember, the Nifty advances are 485 to declines, which are well over 1200 odd levels. So we are looking at a skewed towards the decline side in trade today. Auto stocks, Tata Motors is again opening lower in trade by over 2%. Let's also look at some of the mid cap spaces as well, and how some of the stocks are moving there. IRB Infra, SJVN Coforge from the IT pack, mid cap counters lower in trade. So it's definitely a softer start. L&T lower, 2.5% lower for this one from the big heavyweight counters. That's as far as some of the indication is coming in. I think barring Maruti, Eicher, Sun Pharma, and some uptick which is being seen on HUL, Nestle. Rest all of the stocks are actually lower in trade, and we have definitely seen
हाँ,
even mid and the
ये
small caps open lower in
एक
trade.
मिनट में देखो ना क्या
There is a 200-point downtick as far as the Nifty is concerned now, and we are also seeing mid and the small caps open lower. Vaishali, to you, how would you look at this opening?
Well, so as I said, we are seeing a gap down. So I would say continue. Just wait and watch because I think the way market is going, we can see stock retest. I mean, the sector, I Nifty retesting 23,000 levels to 22,800. So, well, I would wait. But the stocks that we spoke about, ITC is still showing strength. So I
Yeah.
would say that is one stock that I maintain. So is the case with Nestle. If you were to look at Nestle, that also is showing strength. So it is quite oversold. So good levels to start buying.
Good levels to start buying ITC, Nestle. So focus will be on the FMCG stocks as well. What else is pulling up is some stocks within the healthcare pack. Healthcare Global is up by 7% in trade. You have KPI Green from the mid cap space up 5% as well at 404. But what's down is Blue Star, 7.7% lower. Consumer durable space. Zensar Tech, 6.5% lower. Railway stocks, RVNL, 4.5% lower. HPCL, BPCL all losing the ground at this point in time. Vinny, coming to you. Looking at the opening, what would attract your attention? Where would you see as a safe haven for the markets post the budget, which has been rather good, but definitely the sentiment across the globe is pinning down the spirits yet again.
Said that we've just seen the trailer of the things to happen. You know, uh,
Yeah.
with all these countries, putting back tariffs and Trump saying that things could get worse from here. We are not looking at such a good scenario. I think the Mexico and Canada will come around because they're going to meet Trump today evening their time,
Hmm.
and the only wild card remains China. What they are looking to do. So keeping that in mind, I think we should be looking to see what China is doing and buy the dip in consumer stories. They are not going anywhere. We are a very insulated economy. Our good bumper crop, as I told you, uh, good interest rate scenario cycle panning out, and favorable policies. So I think a lot of things looking good out here. So buy the dip for your consumption stories. This is the great time to enter them.
Great time to enter consumption stories, consumption, 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 all the way. This is the space that you need to look at. What about banks and financials then, Vinith? How are you going to be really navigating through this pocket that was actually performing ahead of the budget and providing us with some kind of a relief in rally? How would you look at this space? Heavyweight private sector banks, financials as well.
I think they will also all turn around.
Hmm.
Uh, we are particularly PSU banks offer you a very good window to buy into them because they're quoting at discount to private banks. Their asset quality is on par with those of the private banks, and their ROEs are a shade better than the private banks. So I think this valuation discount is rather severe, and these are very good defensive bets to own in this kind of a market.
Okay. But Vaishali, what happens to these erstwhile favorites, defense and railways? Do you think the announcements that came in had in them to again revive the spirits here, or was very, very probably, minuscule to probably get them back on track? How would you look at it? Of course, there was an expansion in the allocation for defense as well, but do you see them returning to their highs anytime soon, or will it take a long time?
So I would say actually, of course, see the projects what the government has allocated, they are still active. So and there is a good allocation of funds to that also. So I think for a long term perspective, they should do good. And well, it was just pre-budget that we anticipated that there could be something really very substantial, and so we saw a run up. But I think no harm holding on.
No harm holding them. Okay. Vineet, what does one do with the PSU space? Do you think this is going to be something that should be now kept on the hindsight when it comes to investments?
But not really, I think that selectively you can look at these pockets. I think refiners you can avoid for a bit, but if this thing meltdown really starts playing out, then refiners will also look good because oil prices will be under pressure.
Hmm.
Apart from that, I think that certain stocks in the so engineers India looks very good.
Okay.
There will be a lot of activity in terms of you know nuclear power where EIL and NPCIL would partner together to do the work. So that is one stock that you can look at from a very long term perspective. I think power sector looks good. Look at NHPC
Yeah.
offering you very good dividend yield, and if you're willing to build a portfolio for 3 to 4 years, there is a multi-bagger sitting out there.
Okay, got that. Vaishali, would you agree with the power space? Does that continue to be something on top of your radar as well?
Definitely, that goes. I mean, that's a safe haven. I would say power
Mm.
is. I think I agree. And so we have always been recommending Tata Power, REC, PFC, but REC and PFC, we need to see some corrective move, and then once again, it's a buy.
Okay. But Vineet, let's also focus on this aspect, gold, the other asset class. I mean, there are global brokerage firms that are hoping that gold could actually scale up to 1 lakh levels. There's already an uptick on the budget day with this tariff coming in. If you think, like you also pointed out, Trump has already indicated that things could get worse from here. Now, if this disrupts global trade, if this really causes a lot of volatility in global markets, is gold something that one should really go big on?
So I think gold one should go big on, but you should use a SIP approach to buy it
Okay.
because what is happening right now is that gold prices are steadily going up because there's a lot of supply coming in from New York. New York is a very big center for gold sales, and the Eastern world is de-dollarizing through gold. We believe that the Western world will go through the Bitcoin route or the cryptocurrency route, and post that they will go for a digital currency. That is when gold will actually start taking off. So right now is the best phase to accumulate gold, but it's a patient kind of holding of a period of say 1.5 years where gold goes up steadily. But after that, you will see fireworks with vertical rises in the price of gold.
Hmm. Okay. Let me also ask Vaishali on the same aspect. Vaishali, this space like gold financiers, even gold jewelers, they have been showing us some kind of an opportunity to invest in the recent past. What next for such stories?
I think stocks like Titan, Goldium, they are still looking positive, and I think I see upside potential in this. So I would continue to have a positive bias on these stocks.
Okay. Vineet, is there any space that you would still be extremely cautious on? Where do you think, despite the good news coming in the budget, things could be off to a very slow start, and therefore one should really avoid looking there?
So I think IT is one space which we are avoiding like the
Mhm.
plague. We are not
Okay.
very certain how it would pan out internationally. So that is
Yes.
one space we are completely staying away from.
IT is something that you're staying away from. Very, very important to know at this point in time because everything that changes in the US will impact some of these outsourcing sectors like the IT and the pharma sector, which have a lot of exports and focus on the US markets and what happens globally. Vaishali, how would you look at the IT names?
So technically, well, IT sector it needs to move above 40 to 500 levels. So once we see that, I think that will show a robust growth, and it could go towards 44,500 to 45,000.
Okay.
So yes, I think these are the levels to really look for.
Okay. What about the other one, Vineet, Pharma? That's been an outperformer in 2024. Various
Yeah,
segments have
so
actually outperformed
pharma
the. Yeah.
pharma is a mixed bag.
Hmm.
There you need
Hmm.
to be very picky and choosy what stocks you pick up.
Okay.
Uh, I think focusing on domestic pharma stories would be much better. Uh, Even better than pharma would be going through the diagnostic stocks along with hospitals.
Hmm.
So
Okay.
that is what
Understood.
we are suggesting. Yeah.
Hmm. Vineet, before the budget had come in, there was also a lot of talk about looking at the overall scenario in the markets that one should continue to have some cash to be deployed later. There were many brokerages that were saying we have higher levels of cash at this point in time because we do not know how things are going to shape up. What happens to that aspect? I just want to get that understanding for the average retail investor. You did say an SIP approach is important for some of the sectors, but that does that also apply for the overall portfolio as of now? How much of cash should one raise? Vineet?
Pardon me?
Yeah, Vineet, I actually wanted to ask you. We have been looking at the cash component search for a lot of top investors. They've been talking about that they're raising cash, sitting on cash, looking and waiting and watch approach is something that they are deploying at this point in time. What would you want to do? How much of cash do you have right now, or do you think fully invested is something that you will probably go with?
I would park all my cash in FMCG and consumption stories. That is the best cash
Okay.
investment right
All right, Vineet is parking all his money in FMCG and consumption. He does believe that all that extra money that finance minister has doled out will go into these two pockets. So look at these two pockets now outperform Nifty consumption. Okay, before we let you go, top three stocks from the FMCG and consumption basket, Vineet, if you're looking at parking all your money here.
So I think Voltas consumer durables. Uh, I will go with Aditya. It's Aditya Stores, which is the distribution arm for FMCG. Sorry, consumer durables. And another stock that I would like to pick up is ITC.
Okay, got that. Well, Vinny, thank you so much for being with us on this Monday morning, helping us understand how to navigate post-budget strategies. And we will get you back very soon to understand more. But FMCG consumption, that's the space to look at post the budget. Vinith is parking all his money. Top stocks Voltas, Aditya Birla Retail Fashion, as well as ITC, and stop on his radar right now. Vaishali, we'll continue our discussion with you. When it comes to the FMCG basket, even you agreed with ITC at this point in time. What else looks good in the consumption story?
Why not look at trend? Because
Trend.
yeah. So that is one of the stocks which has nicely corrected, and I would say this is a good stock with a long-term perspective, quite good. So this should be taken as an SIP because we saw the stock moving right at around 8,500 levels, and at these we saw it bottoming out at 5,500. So well, this is one of the stocks to my liking, besides the other ones which we spoke about.
Absolutely. So just like how I said, right after the budget, went through and we came back for a conversation with all our top guests on Saturday, I said I think the government has addressed three basics: roti, kapda, and makan, and those were the stocks that we have to be looking at. We did see FMCG, we did see, and you're also talking about Trent, which is a clothing focused or a retail focused chain. Vineet also looked at that. V2 retail is something that he pointed out, and of course the real estate stocks that we have been looking at too. Vaishali, on the realty space, again, macro tech, or are there others? You did have even Godrej Properties, I think, on
Godrej
top of you.
Properties, that's right. So these two stocks are to my liking.
Okay, macro tech, Godrej Properties from the real estate basket is something that we can look at. Okay, another pocket, Vaishali, that we were looking at run up to the budget was the specialty chemical space. How is that looking right now? Are things still okay?
So I think most of the stocks are doing pretty well. If you look at SRF, if you look at the other stocks like Vishnu Chemicals, they are showing a good run up. In fact, even UPL surprisingly has got into such a good trend. So overall, I think chemical specialty should not be overlooked.
Okay, chemicals and specialty should not be overlooked. Let's again look at the sector watch right now. Metals are down today, 2.5%. Oil and gas is down 1.7%. PSU banks down 0.9%. The Nifty Bank overall down 0.7%. IT down 0.6%. Private banks down 0.7%. Financials also similar, 0.6% of a decline for realty. You have pharma down 0.3%. You have FMCG that's lower as well. So these are all the pockets that are actually lying low. Vaishali, do you think metals will be the most risky at this point in time? Looking at what China does, I mean, Trump is already talking about the tariff and what happens to China post that. Is something that we will get a reaction to immediately on metals, or is there something else also bothering this space?
So actually, metal index on the whole has not done well in the recent past. It is on the corrective phase. But having said that, I don't see so much of a downside. Yes, I mean, right now there it is at a crucial support level. The index on the whole is at 8,000 odd levels. So I guess max to max, I would see 7,800, 7,700. That would be the level to watch for. I think pretty much correction has been done with. So we'll wait for it to show signs of reversal. But today, yes, we are seeing a good selling coming in Hindalco. So that's a cause of concern because 580, 570 was a very good support level and that has been broken. So I guess let's see. Are we holding on to 7,800 levels?
Got it. We are seeing some recovery on the markets from the lows, but we're still down in trade. We've been discussing this entire FMCG consumption basket. One more space that is linked to this is the new age food delivery, quick commerce space. That's something that we should be focused on. Zomato again is showing us some green ticks in trade today. Then Swiggy, remember both these stocks had shot up to 10% on the budget day. Gig economy was in focus too. We did see some announcements coming in, and this is the pocket that really employs a lot of gig workers. Your sense, Vaishali, on Zomato and Swiggy, what should one do now?
So Zomato, of course, we saw a good corrective move coming right from 300 to 200 odd levels. And seeing that, yes, along with consumption, these two stocks are also likely to do well. I would say technically this is just a bounce back. We need to have a strong conviction. 200 is the support, and about 250, 260, we would see regain strength and back on track. So for now, I would say just hold on.
All right. Vaishali, you had talked about UPL. It's further surging, 4.3% higher now. SRF also 2.6% higher. In fact, the entire chemicals basket is seeing some higher buying now coming through. So sharp recovery on this space. You're also looking at alkyl amines, Coromandel International, Deepak Nitrite, fertilizers, chemicals basket is definitely in focus at this point in time. Neogen Chemicals, 4.6% higher. So you're looking at this entire space. Apart from UPL, what else do you like here, Vaishali?
So we spoke about SRF. Then
Yes, sir.
have a look at PI. It has opened
PI
strong,
Industries.
and it's chartically also very well placed. I think PI can show good upside move from here on. I think this is an attractive level to get into the stock. And yes, so this is one of the stocks. Besides that, we saw good run up coming in Deepak Nitrite and all. But for now, I
Yeah.
would focus on PI.
Okay, PI Industries. Look at the chemical space. It's actually full of inaction. PI Industries are also up by 4%. That Vaishali is marked. So UPL, SRF, PI Industries. Keep an eye out on these three stocks when it comes to the chemicals basket. That's showing us some uptick in trade today. Although the mid and small caps are still lying low, about a percent loss for the mid caps at this point in time continuing. Vaishali, how are you navigating through the moves on the mid and the small caps right now?
So mid cap sector, Nifty mid cap 100, I think 51 500 should hold on, because if we are looking at the long term channel, 51 500 should hold. But if it does, then I guess it would call for panic. So I'm looking at these levels.
Okay, got that. Circling back to the auto space. Why are we circling back to this one again? Remember, FMCG consumption is being seen as the biggest theme post budget, and within consumption, there is an also expectation that those in the lower band, those who were earning up to 12.5 lakhs, now that they have to pay no taxes, they may actually look at deploying extra money in maybe buying two-wheelers and maybe looking at going forward and deploying that money as way of EMIs and looking at buying four-wheelers too. Maruti is actually up and about in trade, and many auto ancillary stocks are also showing us just slight upticks. Any suggestion here, Vaishali? Auto space, is that going to be in thick zone?
So Sakshi, actually, it is still a stock specific, and we have always spoken about Maruti in the recent past because
Yeah.
it had an established trend. So I would say yes, I would be having a conviction on Maruti, and we have been recommending this stock right from 11,400, 600 levels, and we saw a good spike coming in on Saturday. So the bias still continues to be positive, but I would say two wheelers like Bajaj Auto and all, they are quite oversold, so we'll wait for some reversal to take place to have a conviction for a bounce back.
Okay, got that. So that's as far as the auto basket is also concerned. Anything in the FNO space that comes on top of your radar right now, Vishali?
No, actually, look at the advanced decline also, we are quite pathetic
Mm-hmm.
today. So, no, nothing right now, no. IT
Hmm.
sector, some of the few stocks like Coforge and all are showing strength. But as of now, I think PI Industries, as I mentioned, it will be non-reactive to the whipsaws, market whipsaws. So I would still say that would be a safe haven.
Right. What about the electronic space, the EMS space? Is that going to be interesting? Some raw materials getting custom duty reliefs there. Your suggestion?
Well, I would say let's wait, because overall it's not taking it into positive move right now. So as the mood of the market is still corrective, so I guess let's see all this getting cleared up, and then from there on we can have a relook.
Okay, I understood that. Right. So, in case we have to just wait and watch as far as the EMS space is concerned, this has been one of the erstwhile favorites, but hasn't really bounced back as much. So, we'll have to see how much of benefit really comes in onto this too. But let's again look at some of the other interesting pockets. What else can we talk about? Okay, let's talk about pharma and healthcare, Vaishali. Any suggestion here? What looks good? Where
Yes, so
would you? Yeah,
So pharma sector on the whole right now is showing some signs of corrective move, but certain stocks, like we discussed about Max Health a couple of days back,
yeah.
that is one stock definitely which is worth having a look, because in spite of all the choppiness and all, I mean technically it has a very strong chart. I would say 1000 acts is a very good support, and from those were the levels that we started recommending. And it's showing strength. I think long term perspective also this is good. So yes, Max Health is one of the stocks that I would consider. We also spoke about hospital stocks like Apollo Hospital and Rainbow Children and all. So these are the stocks which I think is worth accumulating from here on. But individual Pharma stocks, I would have to have a look individually. Yeah.
Okay. Another theme that was running in the budget was the tourism space, with the government looking to boost tourism. Udan scheme has been renewed as well. Plans to connect 120 airports over the next 10 years. Many greenfield, brownfield airports announced too. In Bihar specifically, the focus on tourism, when it comes to spiritual tourism or medical tourism, was there in the budget speech as well. What would that do to the entire space? Hospitality, aviation, those linked with this entire space. Vaishali, does that interest you?
I think it's a full basket of a positive bias because if you look at Indigo, if you look at Indian Hotel, these all these stocks are showing strength. So I guess, and that's the reason why I even recommended ITC Hotel. So yes, these are the stocks which one should have to in their portfolio.
Okay, one has to definitely look at in the domestic portfolio. The entire space will benefit from the government's focus on tourism. That's something that you could be definitely looking at. Okay, Vaishali, which is the space that one should avoid looking at? Where do you think the technical structures are the weakest at this point?
So well, right now as we spoke, metal is still showing some signs of
Yeah.
weakness. Then, well, overall, I'm seeing some the sector on the whole. What I just saw was pharma sector was showing some signs of weakness, but others were capital goods. So we had a sell call on ABB, but that too
Yeah.
is coming close towards its support. So now fresh selling, I would not say because as I think according to me, we've seen. Quite a bit of corrective move has already taken place. So now I think one should start focusing on buying rather than sell strategies.
One should focus on buying rather than sell strategies at this point in time. Okay, Vaishali, towards the end of our conversation, any two stocks for the day?
Any two stocks for the day? Well, I would say Axis Bank because technically that has been done with its corrective move. So 994 and 970 would be the stop loss. Look for a trading strategy target of 1040. And the other stock which I think looks good is PI Industries as I maintain because I think I'm very comfortable. The downside risk is also quite limited. So PI Industries is another stock to my liking.
All right. Well, Vaishali, thank you so much for being with us on this morning edition and helping us navigate through all of the stocks in the morning space. Post the budget, things still volatile because of the global cues that we are getting. But as Vaishali pointed out, probably the time to sell is over and the time to start looking at buying opportunities is here. So all the pockets that we spoke about, all the technicals and the fundamentals working, keep an eye out on that. Vaishali, always a pleasure to have you with us and hope to have you soon, back on Business Today on various of our shows. Meanwhile, viewers, we'll start wrapping up the morning trades now. The Nifty lower by 0.8%, 23,279. It's a muted start for this new week for sure. There is a decline across the broader markets. Mid and small caps also lower. Small caps now down 1.8%. Remember, there was a sharp recovery ahead of the budget, but look at the India VIX, it's up by 4.4%. That's where the volatility factor is coming in, 14.7 on that front. When we look at the sectors, particularly banks are down 0.8%, autos, financial services, you have metal stocks that are definitely down 3.65%. That's where the pain is emerging in the markets. You have the even the metals, the PSU banks down by 1.7%. Realty space also giving up some of its gains. Pharma, IT, defensives emerging, consumer durables up and about 0.5% odd or so in trade. So it's FMCG consumption oriented stocks that most of our experts are really going big on as the theme post budget. That's the space that you should be looking at. Let's look at ITC hotels. It's up by 2%. Maruti is up by 1.7%. Titan, Nestle, Eicher Motors, Wipro. These are the four, five stocks which are actually up and about as far as Nifty stocks are concerned. But on the lower end, BEL, 5.8% now lower. BPCL, Hindalco, ONGC, Coal India, L&T. These are all the stocks that are dragging at this point in time right there. Okay, so we will wrap up the trade in the morning edition right now, viewers, but do stay tuned throughout the course of the day. We will get a whole host of market experts and also top economists helping you understand how the budget is managing to move the economy and what kind of indications does that bring in for the overall markets and for investors as well. So this entire week it's going to be extremely important for you to see how to navigate your futuristic strategies. Now the big event, the budget event, is done and dusted. Stay tuned with us on Business Today Television. Good to have you with us.
I am Siddharth Zarabi and we are starting the Secretaries Roundtable after the presentation of the Union Budget. And with me now Dr. V. Anantha Nageshwaran, the Chief Economic Advisor, and Mr. Manoj Goel, the Secretary of the Department of Expenditure. Dr. Nageshwaran, I want to start with you and then take that same question. You know, one of the key